and welcome to the midweek trading session right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. South Africa sells its first dollar bond since 2022, raising 63 billion rand. And China is set to invest over $1.5 billion in Zambian mines for rehabilitation and expansion of Shaft 28 in Luhanshire. The Ugandan government puts 2025-2026 budget projections at 57 trillion shillings, lower than this year's 72 trillion shilling budget. And it's great to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out in most of the markets we track, starting with gold. How's the safe haven doing that? So that's up 0.4%, $2,608 per ounce. So we know, the gold's had a monster run so far. We had a pullback, but now we're seeing the gold bulls try to push back that rally for gold. But U.S. gold futures, that's up lower, 0.3%, $2,614 per ounce. So inflation print, that's on the side of investors right now. So let's get a check on other metals, see how spot silver, that's 0.7%, a bigger move up, $30.91. Than platinum, that's at $952, and we see palladium holding up at $951. So it's up for most of the metals that we track. But investors are looking out for producer price index this week to see what could happen next for the next policy meeting by the U.S. Fed. Forward guidance, that's what investors are interested in right now, and that would definitely direct what plays out in most of these markets. Let's get a check on oil now. We see oil prices edged up on signs of near-term supply tightness, but it's still remaining at the lowest in about 2 weeks, 0.24% up. Same range from this morning, $72.06 a barrel. That's for Brent. WTI crude, $68.26 a barrel, up 0.21%. We know OPEC, they're cutting oil demand for 2024. In its monthly reports, we see there saying that oil demand would rise by 1.82 million barrels per day, and that's lower from the 1.93 million barrel production that's per day. So it's all about China, weakness in China, and that's the biggest oil importer, and that's what's driving sentiment in this market. Two other stories now. About $3.58 billion was spent by the federal government for servicing its foreign debt in the first 9 months of 2024, and this is according to data from the Central Bank of Nigeria on international payment statistics. The amount represents a 39.77% increase from $2.56 billion spent during the same period last year. The latest data from the CBN reports shows that the highest monthly debt servicing payment in 2024, that happened in May, which amounted to about $854 million. A significant rise in external debt service payments shows mounting pressure on Nigeria's fiscal balance amid ongoing economic challenges. At the same time, it raises concerns about the growing pressure on Nigeria's foreign debt obligations, with rising global interest rates and exchange rate fluctuations contributing to higher costs. Well, as 2024 gradually winds down, analysts are already making projections for the rest of the year and the first quarter of 2025. One is from Veriv Africa, data-driven economic think tank. They believe a base case scenario for inflation rate in 2025 will be around 34.52%. Take a listen.
Of course, the insecurity dynamic is multifaceted. At least 5 of the 6 geopolitical zones are bedeviled with a form of insecurity that is, of course, perpetrated by non-state violent actors. We, of course, can now confirm, last week that a new transnational terrorist group, the Lukarawa, just joined in, and we're already seeing fatality rates. I think about 15 people have died now in Kebbi based on the open source reports that we're seeing. So federal government has to take on its constitutional responsibility, which is ensuring that we defend our territorial integrity, also ensuring that lives and properties are safeguarded. That will enable more mining activity that we're seeing. We're seeing an increase in artisanal mining that can demonstrate some growth, not real-time growth in that sense, but also services. For services that we are also projecting would improve that growth for the bull case. We believe that one of the reasons why the services industry will push growth is for two reasons. Dangote refinery, the assumption is that Dangote refinery will be able to supply as much logistical support with its energy supplies. If we can obviously curtail some of the cartelist behavior that we're currently seeing in the downstream petroleum sector. And then secondly, we're able to see energy production ramped up. So we want to see the Siemens project, the Presidential Power Initiative, reach its 100% implementation rate. It's currently doing just slightly below 50%. And that's delivering all of the transformers and all of the transmission infrastructure it should be able to deliver for phase one, so that we can move to phase two.
And now to our first conversation. Nigeria's quick service restaurant industry has experienced a remarkable growth over the past 5 years. But macroeconomic headwinds, including inflation, high interest rates, and foreign exchange volatility, threaten the industry's viability and profitability. Will join us to analyze the latest report by GCR Ratings. We have Busola Akinrola, the analyst at GCR Ratings, joining me right here in the studio. Great to have you.
Thank you for having me.
So definitely, we've seen some growth with the QSR industry, that's quick service restaurants. Break it down for us. What has contributed to the growth so far, and what's the state of the industry according to your report?
Yeah, thank you very much. So what has contributed to the growth has been consistent store expansion and consistent store expansion, but we've seen a decline in that store expansion recently, and what has impacted that is the macroeconomic challenges, which has continued to weigh adversely on the sector. So in recent time, I'll be focusing on three of these challenges, which include high inflationary pressure, high interest rate, and foreign exchange volatility. According to the National Bureau of Statistics, Nigeria headline inflation rate has increased significantly over the 29-month period to June 2024 at 34.2%, before moderating to 32.7% in September 2024. And that has, what has contributed to that increase is majorly the food inflation, which represents the key input for the industry, and that has contributed to high operating costs for the industry. So, and in the other hand, the high inflation rate has also impacted consumers' purchasing power, leading to weak demand. Although the product offering for the industry is non-discretionary, however, the incremental cost cannot be fully transferred to the customer due to low demand. So participants within the industry now struggle with balancing, maintaining sales volume, and protecting profitability. So secondly, in terms of the high interest rates, within a space of 15 months, the Central Bank of Nigeria has increased the monetary policy rate to 27.25% rather, and with a view to stabilizing the economy, right, and also to control the inflationary pressure. So the high cost of funding has limited the participants within the QSR sector to go on store expansion. That has limited them to go on store expansion. As a result, they are forced to scale down on additional expansion and focus on optimization of their existing stores. So those are the challenges that we have seen across the sector.
Yeah, it is quite interesting. You mentioned food inflation, and
yes,
we did see food inflation cross 40%. At some point, moderated, back down to about 37%. But that's a key input, for these QSR businesses. And, definitely I've seen, most of these, businesses have to create some kind of package, affordable packages, for some, they call some hungry man, package, maybe just rice and egg, that kind of thing. So we're seeing that, growing in the industry. Do you think that's helping, at this point?
So, of course, it's helping. Based on our research and our knowledge of the QSR sector as a rating agency, we've seen the industry putting some strategic implementation into practice, and which has yielded some results. And part of it is menu rebranding that you just mentioned, and which is focused to the affordable segment of the market. We've seen this helped them to improve sales volume and also in terms of profitability. Another initiative that they have used is to go through backward integration and localization of input sourcing, and that has helped them to reduce costs and improving profitability. So we've seen this being implemented across the sector.
Right, and definitely we've seen a couple of results out for most of these, for some listed companies. Some play in that industry for the QSR. So do you think we're seeing weakness in some of their financial reports so far, for the 9 months in 2024 and maybe the third quarter?
Yeah, like I mentioned, that the strategic initiative that they put in place has yielded some results. So we've seen the sales volume increasing due to their concentration, rebranding of their menu and the like. So what we have seen is that the industry we remain adaptable and continue to thrive, and even amid the uncertainty within the economy.
How do you think they are navigating, high energy costs at this point? Because we've seen a couple of grid collapses, so far. We've seen most of these businesses rely on, generators and have to buy diesel and all of that. Do you think some are, getting sustainable alternatives at this point to help out?
Yes, thank you very much. Globally, there has been the demand for environmental, social, and governance practices. And what we have seen is, in compliance with these practices, we've seen industry players transitioning into renewable energy sources, which include gas power plants and solar, which has helped them not only to reduce carbon footprint, but also to minimize costs. So they have been able to achieve that cost minimization, transitioning to renewable energy. Right,
and definitely that's a plus for that whole plan right now. COP29 is up, and they want that transition, as fast as possible. So talk to me about key drivers now. We know these companies contribute to Nigeria's GDP. What are you seeing, when it comes to government policy that could help actually, keep these companies afloat? And we know there's this, we have the tax bill at this point of a couple of tax reforms, coming up. That might be, that might scale, at some point. How do you see that impacting these companies?
Well, in form of tax bill, I think they would be impacted negatively. That's my opinion, because, because of the VAT, their ability to, like I mentioned earlier, that they have limited ability to transfer any incremental cost to the final consumer. So if VAT is elevated, then that will impact their operations, because they won't be able to transfer this to the final consumer.
Right, and so much to look out for that industry. And just imagine, someone like me now saying, I want to invest in a QSR at this point. I want to dive into that market. What would you have? What kind of advice would you have for somebody like that?
Yes, I think the QSR industry, like I mentioned, they remain resilient, notwithstanding the macroeconomic challenges. And what we have seen in terms of the initiatives that they have put in place, which has helped them to sustain revenue and help them to also maintain profitability despite all odds. So I believe that would encourage investors to invest in QSR industry. And the fact that the product that they deal with is non-discretionary, so the market is there for them, the youthful population is there for them to bolster good growth within that sector.
Because I remember, as a kid, I used to hear they say, if there's serious economic issues, the first business or the best business to go into is food. you would definitely, people have to eat.
Exactly.
So somehow you'd be able to navigate that market. But what are you seeing for growth for this industry, say, in the next 24 months?
In the next 24 months, yes, we believe that against all odds, that the industry we grow, we remain adaptable to the macroeconomic challenges. They will be able to, with the initiative that they have put in place and the results that we are seeing currently now, they will be able to cope. Yeah. Right.
All right. Definitely, we'll keep looking out for that industry, and looking at some of the business economic surveys so far. It's not been really good data. We saw the BES report coming out from CBN, and participants were not, really happy when it comes to outlook for the economy. But definitely, we hope things get better. Some kind of soft landing, for the economy, which could also help some of these businesses. But thank you so much, Busola, as a senior analyst with GCR Ratings. It was great having your perspective today, talking about the quick service restaurants.
Thank you for having me. Thank you.
All right, we see the Governor of Central Bank of Nigeria, Mr. Olayemi Kadoso, says new capital requirements for banks will boost their ability to expand financial access across the country. Mr. Kadoso shared these views during the second International Financial Inclusion Conference in Lagos. CBN Governor highlights that stronger banks can better support underserved communities, which aligns with Nigeria's goal of inclusive economic development. Take a listen.
Financial inclusion is fundamental and foundational to Nigeria's sustainable economic development. In line with its efforts to deepen financial inclusion, the Central Bank of Nigeria recently introduced new minimum capital requirements for banks. This strategic move ensures that banks are well capitalized, enabling them to take on greater risks, particularly in underserved markets. With a stronger capital base, banks can provide more loans and financial products to MSMEs, rural communities, and other vulnerable segments that have previously struggled to access formal financial services. This policy not only strengthens financial stability, but also serves as a catalyst for inclusive growth.
It's all about the markets. Now we're going to be tracking what's playing out in the local bourse and international markets that we track right here. And if we can see Anita that has the details. So Anita, definitely so much playing out right now. Investors looking out for what's going to happen with U.S. inflation. It's inflation reporting season, and we definitely know that investors are looking out for if it's going to match expectations, and that will definitely drive markets.
Yeah, Ladi, yesterday we had, first of all, we start from the home front. We had financial derivatives company, FDC, which always gives that forecast ahead of the National Bureau of Statistics official data about Nigeria's inflation. And that is also telling us that inflation is going back into the 33,000 level, if not higher, coming from the last time that it was at 32.7% or thereabout. So now inflation, yesterday we also saw from the side of the India's economy that inflation is higher. Today, by about 1:30 Nigerian time, we're expecting that U.S. inflation data will be released. And we do not know if that is going to go higher, because that's one of the major concerns of the current administration in the United States and the incoming presidency of President-elect Donald Trump. So how that comes out at about 1:30 Nigerian time would also have a ripple effect across every market around the world.
And it's quite interesting, experts say, Donald Trump is coming into a strong U.S. economy, anyway, but we keep hearing that most of his policies could stoke inflation, globally going forward. But I guess the market, the Trump traders are easing. You know, right now we've seen the markets, the U.S., we've seen gold, we've seen the likes of Bitcoin actually do very well for the Trump trade. But, you know, on the flip side, gold and oil, not as well, because now there's certainty. But looking at the local ROS now, 0.09%, marginal rise. I did expect it was going to be green today, but this is not convincing yet, though.
Yes, Ladi, yesterday we saw that the market made a pullback. We saw a 69 billion naira in value terms loss. That was due to a sell-off in some large and medium-capped stocks on the exchange. But what you see here, because I spoke not too long ago with one of the traders giving us the intraday market numbers, he said that the likes of Dangote Sugar, GTCO, Access Bank were the ones responsible for the intraday numbers. But let's give our viewers around the world more details about this market. Now, take a look at your board there. From the yesterday, we saw that the market was down by just about some marginal points. But at intraday, this is what it is: 0.09%. In the green intraday. And then, of course, we're still struggling in between that 97,000 points because the market on Monday was in the green, on Tuesday was in the red, and then at intraday before the market closes by 2:30, we're expecting that the market, well, if it will sustain this momentum, your guess is as good as mine, but 2:30 will be the determining time for that market. For the Johannesburg Stock Exchange, 0.43% in the red at intraday, 83,837.44. We had seen the market at about 85,000, but of course, the impact of profit-taking as well as some other factors has led to the market making a pullback. But for the other two markets that we track on the continent, so it was mostly, except for the Nigeria Stock Exchange, it was mostly negative at intraday for the two other markets that we have on one side, the other markets there, and then we also have EGX 30 in the red, 0.04%. But for the close of Tuesday's trading session, Kenya Stock Exchange was in the green, 0.12% at 115.20. So that's it for the equities market, for the markets on the African continent. And now let's talk about fixed income market, where we're going to have a review of Tuesday's trading on the fixed income side, where we have both the we have both the bonds as well as the treasury bills. So let's bring in Orji Emmanuel, fixed income dealer with Access Bank, to give us more details about this and other issues within the fixed income market. Thank you for joining us, Orji.
Thank you for having me.
Yeah, I know this is your first time having you on the show this time, but of course it won't be the first time that you'll be talking about the market. So give us details about Tuesday's activity, just a brief review of what happened in Tuesday's trading session for the fixed income markets.
Okay, so for the treasury bills markets, we are beginning to see some real money demand, given the historical highs of yield at the moment, both in the OMO and the NTB space. If you look at the last NTB auction, where the long end closed at 23%, and that's an effective yield of 29%. So we've been seeing some real money guys coming in to buy those NTBs. Currently, they're trading at 22%, and that's the 100 basis point lower from where it closed at the auction. On the bond space, there's a bond auction next week, so market participants are a bit cautious as of yesterday and most part of this week, and the reason because they expect more supply coming in. But nevertheless, we continue to see some cherry picking on the highest yielding bond, which is the 2031s. We're seeing trade being consummated at 21.35 on those particular maturities. So I think that's what's going to happen for the rest of the week. We'll most likely continue to see some real money demand, the likes of the pension funds, the asset managers coming to take advantage of the high yield in the NTB space, and why for the bond market, so continue to see that cautious sentiment ahead of the bond auction.
Okay, so that's for the bond and the treasury bills auction. But now let's talk about the forex. As at last week, we saw that Nigeria's foreign exchange reserves, which is our external buffer, has climbed back to about a 3-year high of above $40 billion. But at the same time, we do not see this impact reflecting on the country's currency. Now, can you tell us why there's this mismatch? Because the central bank has always been trying to defend the naira using from the external reserves, but then the external reserves have climbed, but the naira is still down.
I think that's been the major question, from the financial market. A lot of investors are concerned how seem to be increasing reserves, but nevertheless, once you see that depreciation in the naira, I think the major reason is that the CBN has tried to two main school of thought, right? The first one is when you're using your external reserve to provide liquidity in the market. We saw that happen at the early part of the year, where the CBN was aggressively intervening in the FX market, not just the FX market, but also the BDC market as well, where we now started to see some appreciation in the naira. But however, there was a lot of concern that, by the time it's December, we would have depleted the whole reserve. So the CBN is going back to the other school of thought, where they feel a robust external reserve would signal confidence in the market, where 22, that would signal.
No, go ahead, please.
Okay, yes. Whereas at the highest since 2022, and that will most likely signal some renewed confidence in the market. So they are betting on the second school of thought, where a more robust external reserves would boost confidence in naira, and prevent any further depreciation. But that doesn't seem to be the case. So we'll definitely be expecting CBN to reassess the strategy, and see if they continue or they come back to the market in order to provide liquidity in that FX space.
Okay, so a final one. This is just in 20 seconds now. Can you give us details about the intraday activities for the fixed income markets as well as the forex markets?
Okay, so for the forex markets, we have seen the bulk of the trades happening today at 1690 levels. Most likely continue to see this persist for the most part of today, barring any CPN intervention into that market. For the bond space, we continue to see activity on the 2031, with bids hovering around 21.4%, 21.45%. So we expect some transactions to be consummated mid those levels. For the NTB space, we continue to see demand on the long end NTB. However, the demand has not been aggressive, given that system liquidity is currently in the negative. So we don't expect to see so much activities happening in the fixed income space today.
Okay, Oju, I think we'll leave it there. And of course, keep our eyes out for how this market ends today, both for the fixed income as well as the equities markets side of things for Nigeria's financial markets. Thank you so much for your time on the show.
Thank you.
Okay, so that was Oji Emmanuel giving us details for the fixed income market, for intraday market numbers, and a review of Tuesday's trading session. Okay, so from the Nigeria, as usual, that we go to the Middle East, where we see the markets there. The Dubai index was the only gainer there, struggling to make some gains, 0.20% at intraday, 4,710.89 for that market. But for the Abu Dhabi index, it was in the red, 0.38%. We see that is coming from yesterday. We also saw intraday, and for the close of Tuesday's trading session, it was in the red. But for the other side of the market, Saudi Stock Exchange, the Tadawul down 0.64%, more than 0.5%. Qatari Stock Exchange also in the red, 0.37% at intraday, 10,420.04 for that market. And from there to the world's #1 economy, where we see stock futures also in the red. So mostly bearish sentiment for starting with the United States, where we see the Dow Jones Industrial Average in the red, as well as the S&P 500 and the NASDAQ. U.S. markets all in the red, and this is coming just as investors are looking towards the consumer price index, which is what you call the inflation numbers, which are expected to come a little bit higher. So that will be released at about 1:30 p.m. Nigerian time. For the impact of that U.S. market, while the market is in the red, it's no thanks to the impact of profit taking, as the market is taking a breather from its post-election rally. And of course, apart from this inflation numbers, which is coming after the Fed announced a rate cut, the market is also expecting the producer price index report for tomorrow, as well as retail sales numbers. But for a review of Tuesday's trading session for Wall Street, let's bring in our Washington correspondent, Maria Bird.
The U.S. stock market took a fall on Tuesday after a post-election rally late last week. It is clear that investors are watching to see what will happen over the next days and weeks ahead. As the Dow Jones was down at 0.9% on Tuesday, the S&P 500 down at 0.3%, and the heavy tech Nasdaq down at 0.1%, just below flatline. Investors are watching as we saw the highest yield since July, the 2 and 10-year yield rates. It is clear that investors are wondering to see if we could see an uptick in inflation and an increase in the U.S. debt.
Our Washington correspondent Maria Bird giving us details about what happened on Wall Street for the Tuesday's trading session. But it was more a grim picture. Okay, so finally, our final stop is on the Asian markets. Obviously, it's also tracking the losses that we saw on Wall Street for Tuesday. The Nikkei down 1.66%, and this is coming as traders assess the corporate goods data out of Japan, which showed that year-on-year, the producer price, or what you call the wholesale inflation in October, reached its highest since July last year at 3.4%. So, and for the Kospi, we also saw the impact of losses from the world's #1 chip maker, one of the world's largest chip maker, Samsung, which recorded some losses there. Its share price hit about a 4-year low on that's today, making the South Korean chip maker one of the worst performing major semiconductors this year. And this is because most of the world's, most of the Asian markets are assessing Trump's comeback, which is he's now the president-elect. So and the announcement of what he will be, the tariffs that he'll be announcing is not going to be in favor of many of the Asian countries, particularly for the likes of Japan and China. And of course, the last week we also saw that that stimulus is not having any impact for that market. Shanghai, like I mentioned, 0.51% in the red, while India yesterday reported its inflation numbers, which was not too good. The market for close of Wednesday's trading session, 1.36% in the red at 23,559.05 points. So, Ladi, that's it in a nutshell for all the markets intraday and for Wednesday.
Right, and definitely looking at most of these inflation numbers coming out, hopefully they're in line, with the expectation. If not, I feel the Trump trade might end soon, but we'll definitely keep watching. Now, thank you so much, Anita, for giving us most of those details from most of the markets that we track. Well, let's take it on to the UK now. We have Juliana join us from our London studio. Great to have you, Juliana. So we're seeing communication workers union, that's the one representing post office staff. They've lashed out at a proposal that could result in 115 branch closures and more job losses at this point.
Yeah, that's right. Good afternoon, Laddie. The CW, as you quite rightly said, they're a union that represent post office workers. They've described this decision, this announcement by the new post office chairman, Nigel Rowton, to potentially close 115 post office branches as immoral and tone deaf. And there's no surprises there. I think our viewers in the UK will be familiar, of course, with the post office, but the post office scandal, the Horizon IT scandal, which has had several column inches in the UK. In fact, it was even made into a TV show. It's been described as the biggest miscarriage of justice in British history, where post office masters, so those who were basically looking after the post office, were falsely accused of stealing money. Now, it's a very old case, but it has been in the spotlight recently. Rishi Sunak's government was overseeing the inquiry. Now it's been handed over to Labour. So a lot of post office workers and families of post office workers have been absolutely distraught and traumatised about this scandal. And then, of course, they get this news just before the holiday season that perhaps thousands of jobs will be at risk because of cost-cutting measures, which, of course, we've seen and we've spoken about extensively over the past couple of months. In fact, we were just talking about it yesterday, wasn't we? Because the Office for National Statistics released labour market data, and there have been so many job cuts. But this one, I think, really hurts. Anybody who's in the UK is familiar with the post office. That's where you go to post your mail. But again, nobody's posting mail these days. Most people send emails. In fact, most people don't even send emails. Lots of businesses conducted by WhatsApp, isn't it? So clearly, their business strategy needs to change, and that's what they're trying to do. But of course, it is going to come at a loss. But it is a very sensitive time for anybody connected with the post office, and also community as well. I think, the post office is once seen not just as a place where you post letters and pay bills, but you actually socialize. So, again, it just talks about, well, the story speaks to the changing nature of the British High Street. But yeah, this is still very much in consultation, but the announcement was that 115 branches may close within the next few months.
It's quite interesting. We were talking about potential job losses yesterday, and this one comes up again. But we're seeing a food delivery company that's Just Eat Takeaway. They're planning to sell their U.S. arm. That's Grubhub. What are you hearing about that?
Yeah, that's right. In fact, this is seen as a good story for Just Eat Takeaway's shareholders. In fact, their shares have jumped 20%. I think it's the most it's jumped this year after they announced that they were finally getting rid of their North American subsidiary, Grubhub. They actually only bought it in 2021. I think I can actually remember discussing this deal with you, Laddie, and they bought it at that time for $7.3 billion US. They've sold it today to Wonder Group. Well, not today. They haven't closed. I think they're hoping to close by the end of Q1 2025. But they sold it for $650 million. Bought for 7.3, sold for 650. So a massive loss for them. But I think shareholders have breathed a sigh of relief because we know that consumer habits are changing, right? During the lockdown, most people were ordering food online. We couldn't, of course, go out. And that business, the last food delivery mile business, was surging. It hasn't been that way, and it's been so competitive. I think there are so many regulatory rules in New York, and it was just really difficult for Grubhub to compete with the likes of DoorDash and Uber Eats. So Just Eat Takeaway, based in Amsterdam, they've decided to get rid of this subsidiary and focus more where their market share is higher, which is in Europe.
All right, very interesting story there. Definitely, we're already seeing that play out with investor sentiment in the market. But how is the UK market looking generally at intraday?
Pretty good, actually. Prime Minister's questions is just ongoing. Keir Starmer back from Baku, where he spoke to leaders at COP. Of course, everybody's waiting for the Lord Mayor of London's banquet tomorrow at Mansion House. Really important for the Chancellor of the Exchequer. She's going to set out or expand on, shall we say, her fiscal policy, as well as talk about foreign policy as well. Talks of perhaps there being a new private stock market in London, which is quite exciting. Lots of people are talking about that, and I think that's lifted up the sentiment of investors at intraday. The all-share is up 0.28%. The FTSE 100 is up by 0.25%, and the FTSE 250, that's up by 0.26%. In the currencies market, the British pound is currently trading up against the US dollar by 0.09%, up to against the euro by 0.02%, and up against the Japanese yen by 0.23%, Laddie.
All right, Juliana, thank you so much for bringing us all those details right there in the UK. All right, we'll take a break now. When we come back, we'll see some stories coming out of Africa and crypto. Let's see if that Trump trade is still growing. That's in a moment. Just stay with us. Welcome back. Still watching Business Incorporated live on Channels Television. Let's get you some top stories coming out of Africa. Now see South Africa's first dollar bond sale since 2022. That drew a strong demand, signaling confidence in a coalition government formed after the May elections. The country raised about $3.5 billion. That's 63 billion rands through two bonds with maturities of 12 and 30 years, priced at yields of 7.1 and 7.95%. Demand for the new bond that exceeded $10 billion. South Africa's new coalition government, which comprises the ANC, the centrist DA, and 8 other parties have made reducing unemployment and faster economic growth their top priority. The sale comes amid uncertainty for global monetary policy after Donald Trump won the elections. The rising U.S. Treasury yield suggests investors believe that his policies may keep funding costs elevated, complicating the environment for nations like South Africa. And in Zambia, China, a non-ferrous metals company, CNMC, they've announced that the company is set to bring in about $1.5 billion in investments for the mining sector in the country. It said the decision was made following the engagements with President Hakainde Hichilema in China on the sidelines of the Forum and China-Africa Cooperation the FOCAC Summit in September this year, coupled with the good investment environment that the country has now. Said the investment, that's about $650 million, will go towards the rehabilitation and expansion of Shaft 28 in Luanshya after completion of the watering exercise, while about $250 million will go towards the development of Samba mines, that's in the Samba area, and $100 million to Lusaka South Economic Zone. And the Ugandan government has put the 2025-2026 budget projections at 52 trillion shillings, which is lower than the this year's 72 trillion shilling budget. In a recent engagement with the Presidential Advisory Committee on Budget, they said the permanent secretary confirmed that the unveiling of this projected budget, definitely lower than this year's, shows that they're looking for a targeted fiscal approach aimed at catalyzing Uganda's ambitious economic transformation, as aiming to grow the GDP from the current $50 billion to $500 billion by 2040. The permanent secretary and the secretary to the Treasury also noted a reduction in the total discretionary resource, which has dropped by 3.9 trillion shillings from 28 trillion shillings. And he also attributed this decrease largely to a significant reduction in borrowing from external sources, which has been scaled down by about 1.3 trillion shillings, from 1.39 trillion shillings to 29.9 billion shillings. So we see countries there trying to reduce their exposure to foreign loans. All right, let's get a check on what's playing out in the crypto market. Is the Trump trade still pushing sentiment there? But we'll see a lot of red, majority for Ethereum, deep red for Ethereum there, down by 5.14%. Bitcoin still managing to stay in the green by about 8 basis points this afternoon. Then we see the likes of BNB giving up gains, but these coins have definitely produced a lot of gains for most of the investors invested there. But nothing goes up forever, I want to believe. So we're seeing pullback there. Bitcoin did flirt with that $90,000 level, did touch it, but couldn't stay above it. A lot of sell pressure from that level. Let's look at the sentiment in the market now. Let's see how investors are feeling. Looking at the Fear Greed Index, is still an extremely greedy market. And definitely the way some investors use the Fear Greed Index is to find entry and exit. Some like to enter in extreme fear, and some like to exit with extreme greed. Who knows? But you don't want to sell too early. But at this point, 84 points, extreme greed is what we're seeing. Let's get the top altcoins that we track for the top cryptocurrencies on CoinMarketCap. So we see Ethereum there down. Cardano, 53 cents, a big 10.51% drop there for Cardano. XRP hasn't really done that much movement like other coins on the top 100 of CoinMarketCap. But we see it's up 3.67%. So definitely investors trying to scale back on some of the profit that they've been able to realize in the market, because if you're in profit and you've not taken profit, it's not realized at this point. Let's look at the top stories in the market. We see Revolut, they're expanding their crypto exchange. That's Revolut is known as a crypto exchange friend. That's like a neobank at this point. They're expecting and expanding their crypto exchange in Europe. You know, they're rolling out Revolut X in 30 new markets across the European Economic Area. And they're also eyeing markets in the U.S. at this point. And now all eyes turn to U.S. inflation. today. Just as Anita said, investors also in the crypto market are looking out for the inflation numbers for October. That's in the U.S. For the consumer price index, the core index is expected to have risen by 0.3% in October, in line with the previous month's increase. So anything above that could rattle, the markets. But definitely, most of the analysts that I've spoken to, they say this is a strong bull market for Bitcoin. But who knows? Could 90,000 be the top, or could it go higher? We'll definitely find out. So let's see if we have Olumide Adesina now to bring us up to speed. Olumide, great to have you, Olumide. So
yeah, good afternoon.
Yeah, all eyes.
It's a bit noisy in Lisbon, but
right.
I heard the headlines you really dropped. But if you look at the market, it's cooling off. It seems that investors are taking an extra look at the Trump effect. We recall that Bitcoin ran a space of about 28% within 14 days. And just between Monday and today, we've seen Bitcoin rejecting the $90,000 resistance. And 3 reasons. First of all, liquidity in the retail side is not as strong as what the market is seeing. And if you look at the fact that just 3 institutions owns 0.5 out of the available Bitcoin supply, it tells you that the market is open to manipulation. MicroStrategy, the United States government, and BlackRock have about 1 million Bitcoins. So this tells you that the market is really open to these players manipulating the market. And, the argument that Trump would bring in the crypto market evergreen is another contentious argument, because Donald Trump is known for putting the US first, is known for putting the US dollar first, and it's almost impossible for you to balance Bitcoin strategic reserve by the United States and also diminishing the value of dollar. So the market is going to see how things will play out. However, it will be much better than the narrative. So that's why today, liquidation, about 300,000 traders lost $969 million. So it's been a very painful session while Bitcoin is rallying rough.
It's quite incredible. We know once Bitcoin, started this run, the shorters, they got liquidated. And now we're seeing those that are expecting Bitcoin to go higher getting liquidated now.
Yeah, so I think if you look at the key headlines there from different policymakers I've spoken to this morning, caution is also still in the wind because you look at, despite the fact that the removal of Gary Gensler will bring positivity, the United States are heavily reliant on their strong institution. So we don't see short changes immediately. Also, there are also concerns that we have so many coins in the market. There are about 50,000 hot coins in coin market cap. And if you look at it, that has also diluted the space. So despite the fact the market hitting a $3.1 trillion at its peak and now moderating below $3 trillion, it tells you much that investors have a problem about picking good value. However, the argument is that XRP, Cardano, and Poker will see the light of day because of the utility around blockchain. But Mimi Coins has taken the shine, and that's because strong community is coming in. But however, finally, if you look at how the Telegram turn blockchain has worked, you see that the market is cooling. So it's really a very unreliable barometer. But my final outlook is that I think we're going to see better days in the crypto market, but it's really a $1 million guess about how it will play out.
Right, but Olumide, I keep imagining, because most of the time in these bullish cycles, you see Bitcoin will make the first move. Then at some point, investors expect that the altcoins will follow and you have some kind of alt season. But is it coming to a time where, Bitcoin will make its moves, but we don't get an alt season?
I don't see it coming to play again, Ladi. Like I mentioned, the key concern here is that if you look at Bitcoin dominance and look at the reason why Bitcoin is really hitting the mark, institutional inflows, spot ETFs, traditional investors are more reliant on the pioneer crypto asset than altcoins. Ethereum, despite the fact that it looks like it was going to break the 3,002 resistance, you could see that it has a major pullback. So the question mark around altcoins is really high. And retail investors have become more cautious. You did not see the influx that we saw during COVID or during the 2017. So it's really a money spinning market for Bitcoin, and also a cautious approach in the altcoin market. So Ladi, while you see some spring of surprises in the altcoin market, generally I don't see the altcoin market hitting as high as the Bitcoin market.
Right. I guess Bitcoin is doing this one alone from the way things look. But thank you so much, Olumide Adesina, financial market analyst.
Thank you for having me, Ladi.
All right, so that's the show today. You can visit channeltv.com for more updates. You can also watch this again on our YouTube channel. Just flip over to YouTube or any social media platform and search for Channels Television, and you'll find us right there. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.